Welcome back to Switzer. For anyone interested in actually buying an investment property, I'm going to put myself in your shoes and pester the hell out of Margaret Lomas to give us the key answers so that you don't muck up your investment strategy. Stand by for a hands-on interrogation of Margaret Lomas. Margaret, how are you?
You're going to be pesky again.
I'm going to make you answer all the questions. Okay, so assume someone's got say 600k.
Yes.
And it's 250 as a deposit, 250,000 deposit, and they're going to borrow the rest.
Yes.
What do you think? Is it a fair deal?
Okay, look, I can't say whether it's a fair deal or not, because what you neglected to tell me, which a lot of investors neglect to do really, is where is it going to be?
Well, you're going to tell me that.
I know that, but the reason I bring that up is because what most investors tend to do when they first get started is they tend to buy a property based on a price range. So the first thing in their head is how much have I got to spend, and then they go looking for a property to match that spend.
Yep.
And it doesn't take into account all the really important things about investing.
Good, okay. Let me just explain to you that I guess as an investor you think, well, I've got 600k to put in stocks, I want to put 600k's into a property. That's my investment strategy, and I want a little bit of tax advantage by borrowing as well.
Yes.
That's where they come from. But you're saying there are other important issues.
So I'm saying it doesn't matter how much money you've got.
Yep.
You've got to first of all work out where you're going to buy, what you're going to buy, and what your overall strategy is, and then work out whether you can afford.
Good point. Good point. And by the way, ladies and gentlemen, we are going to get her to name names. All right. Okay. So
You think that?
Yeah.
We'll see.
Interest only, fixed. And if you say fixed, for how long?
Okay, so this is very important. If you're an investor and you still have any kind of personal debt, always go interest only.
Yeah.
If you have no personal debt, still go interest only, but get the kind of loan that has the option to repay and then draw back up on the equity as and when you
They're quite new, those ones. Once upon a time, they didn't have those ones, did they?
That's right.
But there are...
sort of, yeah, look, they're old, but they're getting better and much more user-friendly. As far as fixed interest goes, that always depends. I like to start by having a look at the 10-year government bonds, see where the government thinks that interest rates are headed. If they think they're going to be heading up, absolutely maybe take 50% of it on a fixed rate.
Yeah. I think this is a good time to do fixed. Maybe 50-50 is a deal. Okay, got that. How do you select the area?
Now this is a great one. A lot of people think I might just get Australia and throw a dart at it, and that's...
Yeah, I've always thought that.
Yeah, that's not a good way to do it, although some people do that. What a lot of people do is they tend to cast the net 10 kilometres around where they live. They love living there. They think this is a fabulous place to invest. No, no, no. You do not know the area where you live. What you know about the area where you live relates to your lifestyle and nothing to do with investing.
Good.
So I start with Australia, start to look at the macroeconomics first of each state, and there's a big process to dive down into those microeconomics that tell me where to start looking. Okay,
now you look at the economy and I look at the economy. I think the state that's got the most potential at the moment is Queensland.
Yes.
And you agree?
Absolutely. It's in growth phase for the first time in a long time.
It's become the powerful construction, powerful state for Queensland.
Absolutely.
Great. So we agree on that.
We agree on that.
We're in Queensland. Now, whereabouts in Queensland do you like? This is what the people out there really want you to say.
I know. And this is important too, because the best way to invest is to be able to identify the right area before the magazines are writing about it, before I'm even talking about it, because you want to be in first. You know, 3 years ago, 4 years ago, we were telling everyone to buy in Blacktown, Penrith, Seven Hills, and everyone went, are you kidding me? We're not buying there. I hate to say that I was right, but I very often...
If you weren't right, you wouldn't be here.
So, exactly. Now, Brisbane, to me, is the very next area to go. There's a whole lot of reasons for that. We've got... It's 26% more affordable than Melbourne in Brisbane at the moment. It's 46% cheaper than Sydney at the moment in Brisbane. And if you look over history, whenever we see a boom happening in Sydney or Melbourne, Brisbane rolls on afterward. I'm not looking at the inner ring. I'm looking at two areas, both the middle ring, so 10 to 15 kilometres from the CBD, and also the south western suburbs out toward Ipswich. Big growth corridor.
Yeah, okay. All right, so let's go the inner one first. What's your... I know you have a favourite suburb or two. What are the two favourite suburbs?
I really like Nunda at the moment.
Nunda?
Yes.
How do you spell that?
N-U-N-D-A-H. I like Nunda, and I also like the areas up around Clayfield, but a little bit north of there, bordering on the bottom of those northern suburbs, up along the Bruce Highway that gets up into Kalanga and the Moreton Bay Shire.
Okay. rightio. And so what kind of price range are we talking about there?
Look, we'll probably get something around about the $350,000 to $450,000 mark, and you want to go median price there. You don't want to go anything over that.
Yep.
When you look down along that southwestern corridor out to Ipswich, we're talking high 2s, early 3s, and you want to go under the median in those areas.
Why is that?
One of the reasons why we choose to go under the median in an area is where we see a lot of property price pressure because wages are rising. We see people very quickly begin to move up through the price levels, and those under the median prices get dragged up. When we're in an area where we're not going to see a big change in incomes because the same people are staying there, then the median price properties are usually the ones that perform the best.
Okay. Houses or apartments in these areas?
Okay, again, this depends on where you're going to buy. People often buy an apartment because they see it as a cheaper option or a first step or a stepping stone into investment. Could be the worst thing you ever did.
Yeah, because you say it's what people want in that area.
Who lives there?
Yeah.
If you're buying in the southwestern suburbs of Brisbane at the moment, you would never buy an apartment because it's all families. You've got to cater to the families. If you're buying in an area where it's all young, upwardly mobile professional couples, you'd buy an apartment.
Yeah. You said not the inner ring. Have the apartments around Brisbane on the river, because like as a Sydney sider, when I go to Brisbane, gee, this looks great.
Yes.
Have they been sort of bidded up so there's not great returns on them now?
There's not, and there's also a fair amount of oversupply.
Yeah, I was wondering
we
that.
also have a lot of developers who go in there, they offer the off-the-plan apartments, and a lot of people purchased 2 years ago, about to be completed, and I fear that we're going to have a Docklands situation. We've got apartment block after apartment block coming online in Docklands. A lot of people are buying them off the plan. 2 years ago, they're settling at $50,000, $60,000 up to $100,000 under what they're paying, and the rents are down because there's just so many of them available.
Okay, on the subject of rents, let's take Nunda. What's the typical kind of property we're talking about at Nunda?
You're going to get a 3 to 4 bedroom house there, and it's probably going to be about 30 years old.
Okay, will there be a swimming pool in the backyard?
Oh, look, maybe.
Is it important?
No, you probably don't want a swimming pool in a rental because you've got to pay for the chemicals to keep it clean or
good.
have it
Okay.
ruined.
What are people going to pay in rent?
With Nunda at the moment, the rents are only around about 4.5% to 5% of the purchase price. But I see those rents starting to get pressure because the area is starting to become a lot more popular again. It's been through.
Well, after tonight's show, it's going to go going through the roof.
Everyone's going to be wanting to buy.
Nunda. Yeah, right. Okay. All right. So we accepted that. Agent or no agent?
When you're buying or selling?
We're a buyer, remember?
Okay, if we're buying, then I definitely would always go through an agent, but be very careful. Everybody thinks, oh, they're a great agent and they're looking after me. No, they're not.
Okay.
An agent is looking after the person
Themselves?
selling the house first, and then themselves second, and you come in a sad last. Yeah. So, yeah, you need to have the information up your own sleeve. Don't expect the agent to give
Management of the property with an agent?
Absolutely. Yeah. An agent or a professional management company. Never forget that if you want to build a large portfolio of properties, you're a property investor, you're not a property manager. Yeah. If you want to manage the property, go for it. But have you ever worked out what the rate of pay is for a manager? With all the work you have to do, you're probably going to save yourself maybe $10 or $15 for the week, and your hourly rates will work out at about $2 an hour. Okay. So don't try to manage it yourself.
What's the minimum return that you would accept before you bought a property? Like, so you're going in, you think it's worth $300,000, you think you can get maybe $300 rent?
Yep. Okay,
is that doable now?
Yeah, it is doable, and 5% is about the mark. But don't forget this, when people talk about property yields, and when, particularly share investors who like to sort of put property down all the time.
Yeah, they're terrible, aren't they?
They are terrible. Yeah. They say, 5% return. But in reality, the average person is getting a 30% deduction on not only their losses, but also on their on-paper costs. So on-paper deductions can be quite lucrative. When you add your tax to the rent, that does boost your yield up around the 7 to 8% mark.
Good point. It's a bit like grossing up with franking credits, isn't it? Very good point. Yeah. Quantity surveyor?
Absolutely. Yeah. Quantity surveyor worth every penny. I've got one on the show tonight.
Oh, okay.
They come in for $600 or so. They will get back at least 3 times that in your first
tax deductions.
In deductions that you can't possibly find. If your accountant says to you, no, we can work that out, just get a new accountant.
Okay. But on the same point, do you think if you've never been in investment property before, it's good to go and talk to your accountant about what the tax implications are going to be for you with the income you've got and all that sort of stuff?
Look, it's important to have a good accountant, find out if he owns property himself. If he does, he will know every deduction available.
Yeah.
If he doesn't own property himself, he may not, because there are a lot of deductions there and a lot of rulings.
Yeah.
More importantly, if you're going to be buying property as an investment, don't fall into the trap of believing that just because someone calls themselves a property investment advisor, that they have anywhere near the kinds of qualifications or supervision as a financial advisor will have. Because they don't. There's no regulation around property advisors, and most of them are just a front for a marketing company selling property. Go to a proper property investment advisor who can do an entire strategy, and don't become an investor by buying your first property. Become an investor by becoming educated first.
Have a strategy. All right, now, before we go, we've got a minute or two. Around the country, people would love to say, what's your favourite suburb in Sydney now?
My favourite suburb in Sydney is probably, look, it's probably Penrith still, but it's really in a closing window.
They're trying to line me up. Melbourne?
Melbourne, I really like Frankston.
Adelaide?
I really like Seaford.
And Perth?
And Perth, probably Armadale.
Okay, fantastic. Well, I'd go rest of the country, but at least we've done something for the rest of the country.
Excellent.
Thanks, Margaret, for joining us in the program.
You're welcome.
We're out of time. Thanks for joining us. I'll see you guys tomorrow night.